DR Horton. They reported yesterday. The stock was down significantly on the print. Just to contextualize it a little bit, they said that they lost about 100 basis points to their margin, their gross margin on home building, to rate buydowns. So essentially, a rate buydown is, if you're you're a buyer looking to buy a new home, but you've got obviously concerns about the high rate environment we're in. DR Horton, along with most other big publicly traded home builders, have programs in place where, as basically part of their incentive structure, they will enable you to get a lower mortgage rate, either for a period of time or for a longer period of time, depending on what they're offering at the time. And the cost of that in the fourth quarter, calendar fourth quarter, unsurprisingly, was very significant, given that was the period in time when rates were really challenging, particularly through the early months.
Well, I think it was worth spending the time because, one, most people at their home or their real estate's in their top three possessions in terms of their hard-earned capital, and two, we bought the damn dip finally in housing stocks yesterday. So I mean, we had this discussion, not surprisingly, right before it happened, because I said I'm not going to buy anything at the top end of the range, even though it's been signaling buy. But in one day, ITB, for example, as a proxy, and when you have a major component of ITB down 9% on the day, you're going to get, follow through and selling and impact. And that's how you do it. Okay. So everybody who subscribes to Portfolio Solutions saw me do that. If you don't do that, I mean, get long housing from here, I guess, just, like on the whole fundamental, like you and I traded notes on this last night, and you said how it manifests was in DR Horton's margin or in a buying opportunity in ITB, right? That's the action. But how it also manifests is it artificially or sustainably inflates housing prices. The price doesn't come down. That's the whole point. I want you to be able to afford my high sticker price so I can continue to afford my cost structure and my margin structure. And we're going to keep, the one thing that needs to come down a lot for inflation to go down a lot up. I mean, it's just one more example of how 2/3 of Americans aren't going to be able to buy a house.
Hey there, Hedgeye Nation, or if you're not part of Hedgeye Nation, thanks for watching Hedgeye on YouTube. If you haven't already, make sure to click on the button below there. Subscribe to our YouTube page. You can also follow the link in the description to our website to get even more great investing content.